What's going on, you guys? Welcome back to another video, and in this one we're going to be talking about the CCI, or the Commodity Channel Index. Alright guys, so this is actually going to be another video in our indicator series where we just discuss different indicators that help to bolster technical analysis, right? So in this one, like I said before, we're going to be talking about the CCI. So without further ado, let's get right into it. So you can see here we're on the Google chart on TradingView, 1 hour time frame, and yeah, you can just see our candles on the screen here. So how do we actually get the CCI indicator? Well, come up here to indicators, type in CCI. You can see Commodity Channel Index comes up, and boom. You can see that we have a blue line, which is actually our CCI, and then there are 3 dotted lines. There is this dotted line around 100, there's one around 0, and there's one here around negative 100. So the CCI can be thought of in a similar way to the RSI, which is the relative strength indicator, which we've previously covered. And it is an oscillating indicator, just like the RSI is, and people use it like the RSI to predict when, or to see when price is overbought or oversold, right? So it's thought of that 70 to 80% of prices movements will stay between 100 and negative 100, and anything that pops above the 100 is thought of to be overbought, and anything that drops below the negative 100 is thought of to be oversold. Now the way that this line is actually calculated is this line is the difference between price and the EMA, a moving average that is applied to this chart. So standard is usually about a 20 period moving average. So if I just add a moving average here, alright, so you can see that we now have our moving average on the screen. I've added a 20 period moving average, and you can see that when price crosses from below the 20 period moving average to above it, you can see that price goes from below 0 to above 0. So when this price crosses the moving average, when price crosses over from being below it to above it, it crosses from being negative in the CCI to being positive. You can see that there's a pretty large gap between right here, between price, where price is, and where the corresponding moving average is. So you can see that at this point in the CCI, we've actually popped above 100. We've popped above it, and this is thought of to be overbought, right? You can see that obviously price end up continuing to move to the upside, but this is just an indicator, right? This is something that we use to bolster our technical analysis. This isn't something that we use on our own. So you can see that price is overbought here, and then we have this pretty indecisive candle here. Price doesn't really want to move higher or lower. It stalls for a bit before ending up moving higher, and then there's a gap in the market, and then price starts to come back down to roughly the same area that the move started from. So you can see that if you are able to analyze the market correctly and even analyze the CCI correctly, then you probably could have made some money here, because just me looking at it off the top of my head just really quick, I see that there's some divergence here in that price action is rising and the CCI is falling, indicating that price is likely going to turn around. And what happens? We get this gap in the market, price crosses over here, and boom, that's a 2.7 or 4R move to the downside, right? So it all really depends on how you look at the CCI and how you analyze the charts, and how the CCI may or may not be able to help you in your strategy in analyzing what's actually going on. So that's about it, guys. Thank you guys for watching. Hope it provides some value. leave a like, leave a comment down below on any other indicators you might want us to cover, or just trading topics in general, or not even just trading, any entrepreneurial topics you want us to talk about in general, because that's what we're here for. But yeah, without further ado, catch you guys in the next one.